Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of GoldStockData.com, as well as CEO of PTX Metals, Greg Ferron. Hey guys, how are you?
Good.
Hey, John.
How are you, John? Hey, Don. Nice to see
Everything's
both of
good.
you
Yeah,
again.
Greg. Welcome to the show, Greg.
Yeah, thank you very much. Great to be here.
Yeah, so Greg, gosh, we met 3 or 4 years ago. I've been a follower of yours since you were at Treasury Metals and now at PTX. The symbol for those listening is PANXF in the States, PTX in Canada. Greg, why don't you give us a 7 to 10 minute overview of the company, and then we'll ask some questions.
Yeah, okay, sounds good. Well, nice to be here again. And yeah, I guess we've been talking now for a number of years with Treasury, Laramide, and now PTX. So I'll do a quick intro, and I'm just going to support my discussion here with a couple slides as well. So as you know, it's an all Ontario focused company. Quite a significant amount of experience working in Ontario. I think I was telling someone today, approximately 10 different projects I've worked on in Ontario. So most regions, from Dryden, Red Lake, and Timmins, and as well, of course, up in the Ring of Fire. And so this company, I've been the CEO now for 3 years. It's been quite interesting, challenging, also quite rewarding. I think we've made some really good progress over the past 3 years, and I think now it is a very attractive entry point for shareholders. For a number of reasons, we've done a lot of de-risking of these assets. Have demonstrated that they're good quality assets, and we're also I've changed the shareholder base quite a bit. As you probably have noticed, we've seen a fair amount of trading in Canada. I think we've traded about 60 million shares year to date, and the volume has been increasing as well in the US. And then, of course, you've got a stronger environment for resource stocks in general, and the equity markets are quite strong. And then Ontario, as you know, is a great jurisdiction. It's one I know quite well. And there's a big push in Canada and Ontario, at all levels of government to really improve the Ontario region, which is already a top jurisdiction for gold and copper, for example. And what I've is put together two flagship assets. Both of them are big scale projects, so meaning the size of the projects. They're in Ontario, the Abitibi, in Shining Tree, just south of Timmins, which is surrounded by a number of operating mines. And then in the further part of Ontario, near Pickle Lake in the Ring of Fire, it's a new copper nickel region that is being developed by the Ontario government. And they're surrounded by a lot of majors as well, which should help with investments or joint ventures as these projects get advanced. In addition, I've been building a strong technical team as well that complement these assets. So here's a map of Ontario, which you would have seen. There's our copper nickel project, which is at the resource stage, and you can see the Musselwhite, an operating mine in Red Lake, and this circle here is really just showing the power lines and roads that have been put in. 16 communities have received power over the last year, and then of course our gold project down in the southern part near Timmins and Sudbury in the Abitibi, where we've had a number of gold discoveries. So just spend a moment talking about both the projects today, John. And before I get into that, here's our capital structure. So we've got about 118 million shares outstanding. As you mentioned, we trade in Canada on the Venture Exchange under PTX and PANXF in the US. One thing with all the companies I've been involved with, Oh My Gold Mines, Treasury, Laramide, I've always done a lot of work in Switzerland, as you're aware. So we've got quite a large shareholder base in Switzerland, France, and Germany. They generally are family offices and institutions and long-term shareholders. The board and management are also big shareholders, which I think is quite important. I've been adding to my position in the market along with JD and Fred. And FanCamp has a nominee on the board, so that's about another 20%. And then the balance, of course, is retail, some institutions. And one thing I'd like to do, and I should note Alamos as well as a shareholder, and the founder of the company's family is still a fairly significant shareholder. So it's a nice shareholder base. And what we're looking to do now is obviously expand our profile in the US, a very large capital base there, and then look to start adding more institutional investors now that we've been de-risking. So here's our flagship W2 in red. As you can see, we're on the west side of the Ring of Fire. You've got Wyloo, Juno, Tech, so some big players in the camp. And there's been a lot of historical money spent on this project. It was discovered in 1980 by Inco, one of Canada's big copper nickel producers, and then another company, FNX. So that's why we benefit from having that work, and why we've got such a head start in terms of the size of our resource. So what we've been doing is been drilling, doing metallurgy work, and confirming the size of that resource. And so you can see the bulk of the mineralization is in the CA1, the CA2, and then the AP. And then these other pods are where we think we can add additional tonnage. And what you're looking at here is the exploration target, and behind it is the mag survey we did. It was an airborne survey, and this red is showing the Gabbro print. And we believe that based on the 120 drill holes in this area, we believe that the entire area is mineralized. And to give you an idea of the grade, John, if you look at a 0.7 cutoff, it's about 0.3 copper, 0.2 nickel, and then you get about 1 gram when you combine the gold and platinum palladium. And one interesting thing we realized from a recent program is when FNX was drilling this over here in 2005, and Inco was drilling this area much early. They didn't assay for platinum, palladium, gold. So we're happy that we're finding similar grade platinum, palladium, and gold in this region. And we think we're adding to our, a fairly significant tonnage already. And right now you're looking at about 3.5 billion pounds of copper equivalent. That's using the lower cutoff, so 284 million tons. So you're starting to get into the size of quite a substantial body of copper, nickel, and then you've got about 2 million ounces at this point of platinum, palladium. And you can see we're just working within the central part of the project, and it's right at surface. You get into the mineralization at about 10 meters. And, one of those holes you would have seen in a recent drill program, we drilled over 235 meters. We extended the open pit down another 100 meters of new mineralization. And then we're assaying again for all those commodities that Inco didn't, because at the time they were just looking for nickel or copper sulfides. And now let's get into our gold portfolio, which I'm also quite excited about. Again, a big district project, 300 square kilometers in a region that's got a number of operating mines. We're on the right deformation zone, which hosts these big deposits like Cote Gold or Borden Mine, owned by Newmont. And we've made a number of discoveries. We made a new discovery at Heenan Mallard right at surface. Again, we found a gold porphyry system. And then we bought the former producing mine in the Shining Tree camp from Alamos called Ronda, where it produced around 4 grams gold. And you may recall earlier this year, we had that when we bought the mine from them, we went and stripped the area and found 16 meters at 9 grams. We had already owned the previous underground mine, so now we'd like to begin drilling and developing a resource in that area because it hasn't been drilled. And then we've got some resources up here in Herrick and Caswell from drilling that we've done previously, and had some nice results there as well, like 60 meters at 1 gram, and then some higher grade right at surface. And we've also been doing a lot of work, as you can see, looking to develop new targets in and around that ride-out structure. And as you can see, we're also located right beside the Aris deposit, which is about 4 million ounces if you use a lower cutoff, which has recently been spun out by Aris. And we've also, then this is the Heenan discovery we made. Again, we were just following up on an IP target, and we drilled 70 meters at 0.5 gram. And we still have to drill the original discovery that Noranda made just south of the property, around 4 or 5 grams, over 4 or 5 meters right at surface. And that's the plan going forward, is we'd like to continue following up on that discovery we made at Heenan, and then drill this Camp River zone that hasn't been drilled by PTX. And we've also got some royalties and a position in a uranium company that's going public. And then the one thing I think I want to just leave the presentation off with is just the value. We're in good jurisdiction. We put together a very experienced board and management team. We own our assets 100%. There's no payments outstanding. And then when you look at the value that we're, trying to surface, if you take a cutoff of about 0.5, there's 2.3 billion pounds of copper. So that's an equivalent. So it combines the nickel, the precious metals, divided by our number of shares outstanding. That's $19 per pound. per share. But if you take the in situ value and let's be very conservative and take 2% of that value, because obviously these projects are never bought for their full in situ value, and there's still de-risking to be done. That's $1.75 per share US. That's 2% of the in situ value. And then you add in our gold portfolio, our royalties, our equity position in Green Canada, and that's roughly about $1.85 US. And as you know, we're trading between 12 cents in Canada and maybe 8 cents in the US, and that includes no value for any potential takeover or asset sales or exploration. So I think there's a lot of value, and that's why we're getting a bit more aggressive, starting to market our story in new markets like the US, and trying to get more investment advisors following the story in Canada.
That's great. Thank you, Greg.
Yeah.
So going back to that slide that you just had, so you just mentioned that it's roughly 12 cents a share in Canada and about 8 cents in the US. It's actually closed around 0.074 in the US today. I mean, how is this trading like where it is, given the share structure slide that you just put up there, which seems that 118 million shares is not 500 million shares, right? And it seems like you've done a good job of going through Europe and finding family offices and institutions that are taking a 5% chunk here, 5% chunk there. So is there something in the past of the company, like a financing or something, that may have just caused more selling than the average junior, in your opinion? Like, what do you attribute it to?
Yeah, I believe, I think two factors. One, we did a financing, as you know, in November, December of last year. We did raise a fair bit of institutional flow through in Canada, which is, funds exploration. And that capital was needed because we really had to demonstrate a lot of our own work. Because as you know, the copper project was a lot of historical work. So now that we've done that, we've demonstrated that the results are consistent from these good operators like Inco and FNX. But as you know, those are very short-term investors. They have sort of a 6-month to 12-month maximum window where they need to redeem those funds. So going forward, we're going to look to do more institutional hard dollars and charity structure, which generally brings in better long-term buyers. So I think that's probably the main reason why you've seen the shares haven't yet broken out, because you've been trying to find buyers for that. And now that's cleaned up. I think there's a real opportunity for the shares to move. And then, like I said, the other reason, I think, just, when I became the CEO 3 years ago, I wanted to make sure we got a lot of de-risking done of these assets. We got metallurgy done now. We've got a resource out. And now I think that is going to start being reflected in the share price as we move forward.
Okay. Yeah, that's great. Yeah, that is pretty true of junior mining, where sometimes the financing can really hurt a stock for months, and I think most of the selling seems to be over, because I do track it. And that can you go to the share structure slide, please? Because that might help clients and investors get a better understanding of the opportunity here, because it seems like you have a pretty tightly held stock. Could you speak to that?
Yeah, no, I agree. I mean, I think that whole period has been off for about 3 months, and that was quite a substantial number of shares, say 15 million shares, that needed to find a new home, and that was really the institutional number here. So that's now been family offices, I'd say retail. We've seen improvements in trading in the U.S., so I think we've been adding quite a few U.S. shareholders. We actually recently got DTC with our U.S. listing, so I've been seeing that position growing. So yeah, so we're definitely expanding our shareholder base, and what is already a fairly tightly held capital structure when you look at the different groups, like in Quebec and Alberta. And then going forward, yeah, I think there's a real opportunity to start adding investment advisors in Canada, because they're coming back to the sector, and then of course U.S. and institutional investors.
Yeah, that's great. You mentioned on the last slide about the copper equivalent. Like, what does that mean in gold equivalent terms? Like, when you add up all the deposits, what kind of a gold equivalent would you attribute to the stock? Would any ballpark there?
Yeah, that's a good question. And the reason we do copper is it's a polymetallic. And so a good peer would be, say, Polymet in Duluth, which is being developed by Teck and Glencore.
Okay.
We've got similar copper grades, but and another project would be, say, like Chalice in Australia, Gonerville. It's more of a platinum palladium dominant
Yep.
polymetallic. But we've got similar platinum, palladium, gold grades, but copper and nickel grades are quite a bit higher in our project. So that's why we base it on copper equivalent because that's the dominant metal. But to give you an idea, I would estimate that a gold equivalent would probably be around about a gram per ton. So think of it like a large, we get right into the ore body, as I talked about, within 10 meters, and you've got, 300 meter zones of consistent mineralization across 8 kilometer strike length. Not all of it's in the resource, but you've got two substantial resource areas, the AP zone and the CA zones, which have both had about 50, 60 meters of drilling. So think of it like an inferred resource. So I'm not sure what that would be in terms of a comparable, but you're probably looking at about a 3 to 4 million ounce, 1 gram open pit to put the kind of the in situ value comp together.
Okay. That's strong. Don, I'll turn it over to you in the interest of time.
Yeah, so I counted 4 projects. I mean, W2, Timmins South for your both of those are your copper, right? W2 and Timmins South Timmins, are those are both your copper palladium? Is that correct?
Yeah, so W2 is the copper, and
Right.
then our gold projects
Oh, South
are
Timmins is actually the goal. Is actually
is the
your
gold.
goal. All
Yeah,
right.
yeah,
Okay.
that's correct. Yeah, and
So
then
South Timmins includes the Shining Tree.
yeah, exactly. I can go to that slide just to refresh you. Yeah, so you've got
Okay.
that's our South Timmins portfolio. You've got Shining Tree and
Okay.
Heenan Mallard. I mean, in my mind, it's kind of one gold project, but there obviously are two
Um,
separate projects: Heenan Mallard and Shining Tree.
right. So how
Yeah.
much does Fan Camp own of those two projects?
Yeah, so they're an equity holder of the company. They own about 5% of the equity, and then they own 25% of the gold projects. They sold us Heenan Mallard, and then we gave them an interest for selling us 100% of Heenan Mallard. They got a 25% interest in Shining Tree because we felt that there was some synergies
So they
having these projects
so
together.
they don't. So you own 100% of W2.
Yeah, W2 we own 100%. That's
Do,
correct.
do, do they have an option on Shining Tree and Heenan Mallard to increase it from 25?
No, no, they don't now. No, I mean, how it works is a kind of a typical joint venture. If we funded $1 million program, they would have to obviously fund their 25% pro rata interest, or else they would get diluted down. But they have no right to, increase their
So
interest.
yeah. So what are your plans for both projects? When I say both, I'm talking about W2 and South Timmins. What are your plans?
Yeah. Well, I think what's important at W2 is we're finishing up the metallurgy, and we've also got a US based geophysics expert who used to work at BHP looking at all that VTEM and mag data. And then what he's going to help us look at is trying to find some of the massive sulfides, because I think we've done a good job confirming that there's a big disseminated low to medium grade polymetallic project there. But within each drill hole, we find massive and semi-massive, sometimes 2 meters wide, sometimes 10 meter wide, and it sort of repeats throughout these wide holes. So we really want to have a double-pronged strategy of continue infill drilling, getting that resource ready, but also looking to find some of that massive sulfides and then drilling that gabbro area. Because I think as this camp gets developed, Don, the idea would be, joint venture with the major or some of these bigger players that are in the camp, like an Eagle, for example. So that's kind of the 1 year plan is to get out and drill that project after we do that geophysics work and the metallurgy, and then on the gold portfolio as well. I mean, we've made some nice discoveries. So there's kind of Shining Trees kind of at the resource stage. So you don't want to start drilling that, putting a resource together, a compliant resource. And Heenan and Mallard, you just want to continue following up at that near surface discovery we made. You get right into the gold porphyry system within 4 or 5 meters from surface. So there's a lot to be done there in terms of stripping, trenching, and then stepping out along that discovery. And ultimately, though, I mean, we could eventually look to say spin out this is a separate gold company, or us consolidate the camp through an acquisition or a sale of the assets. So that's something that we're obviously open to now that the market is more more interested in the gold sector.
Right. So your W2 project is, really interesting because it's big and it has palladium and platinum and gold offsets. So it makes it a very low cost copper mine or a low cost PGE mine, either way, right? Either direction you go.
Sure.
So,
True.
So at a certain point, because I think platinum prices could absolutely explode. When I say explode, I mean like double in value. And if platinum doubles, then it'll pull palladium up. Now, the reason why I say it's going to explode is because there isn't any. And so to some point, we could run out of it basically. And at that point, the prices would just go ballistic. So at that point, W2 becomes really interesting, especially, if we get to like $3,000, $4,000 platinum prices, suddenly the copper companies are going to be really interested you get that kind of offsets. So then you want to get the ideal JV, right? It'd be really good if like you got 30% you were free carried. That would be kind of an ideal situation for you. Then you can go focus on your gold projects. Is that kind of, are you looking for that kind of that ideal situation where you get kind of a free carry JV?
Yeah, for sure. I think now that we've done, the mineralogy and metallurgy and, another round of drilling showing that we can continue to get this resource, converted to a measured and indicated category, and as well show that it can get much larger. I think at that point, then you're going to want to see a major come in to acquire it, maybe someone in that camp or someone that's looking to get into the Ontario copper market. Because there's not many, as you're aware, there's not many new copper nickel camps that are being developed. Yeah.
Right. But what makes your company exciting, if you will, is your insiders are very strong.
Sure.
Your insiders are almost 50%. So somebody calls you up and wants to steal it and says, okay, we want to buy your company and we'll give you 100% premium. And you're like, no, sorry, we're not for sale, right? So you're not really for sale at this valuation because no one's going to pay you what you're worth. So the only thing that makes sense is a JV deal, right? At this point in time, unless you exploded in value. But as of today, it doesn't make any sense to sell the company because no one pays 500% premium. That doesn't happen, right? And that's kind of the minimum price you'd want to sell it. Your valuation is what, $12 million today. It's kind of silly, right?
Yeah.
You're right. Pick your project. One of them's free. They're both worth $12 million, I think. Well, the gold project, maybe it's not worth 12, but it's in that ballpark, right? They're both. If you look at the drill holes, it's a significant discovery. Both projects, right? Shining Tree and Henan both are significant gold discoveries. They just need to be drilled more. You could make an argument that they're both exciting.
Sure. No, definitely. And it's interesting.
I've seen gold projects be valued at 20, 30, 40 million dollars, and they're nowhere near as exciting as yours, right?
Sure. Yeah.
So, and you're valued at 12. So you could make an argument if you spun out W2, you'd probably still be worth 10 million.
Yeah. No, I totally agree. I think if you spun out W2, you keep that value. And good luck today in Timmins consolidating a land position that size. All of the key areas in Timmins is taken, right? That's on that right deformation zone.
Right. So I agree. Timmins is a fantastic location. So, but the problem you have is your size, the value of your company. If you do a 20% dilution, all you raise is $3 million or $2.5 million. It's really difficult for you to raise money without diluting your shareholders significantly. So that's the problem that you face here. So he's like, how much can you drill? Right? It's hard. So how much are your royalties worth? I mean, if you tried to sell those, I mean, is it too soon to sell them? Everything's too cheap. I mean, we're almost at the point where you need to just hunker down and wait for the tide to raise all boats, right?
Yeah.
So your company will double in value if you do nothing, right? Just on
Yeah.
the rising tide thing. So you almost have to
No.
just sit back and wait until until your
Yeah.
company it's worth more money before you go out and raise. Your royalty thing, is that worth any money? I mean, could you do that? Could you
Well,
sell?
yeah. Yeah, it's a good question. Well, I'd say the equity position, that company's going public, the uranium. So that's going to put an investment of 3 to 4 million on our balance sheet. We could look at doing a royalty sale and include one on Shining Tree and W2. Perhaps you sell to a royalty company an option to buy the portfolio in the future, but conditional on them becoming an equity holder. That's something that I've been approached on and would consider doing. And you're right. We need to be marketing. We need to be very, very strategic on when we raise money and with who and how we deploy that capital. I mean, I think we should do another financing, get a bit more drilling done. And then I think our valuation, my guess is in 6 months could be 2, 3 times where we are today. And then we could get or more. And then we could get that bigger raise you're talking about, Don, like that $10 million raise, which would really allow you to get that resource much larger. So I agree with you. Our strategy is going to be, we'll be very strategic from here because we know we're sitting on a lot of value. We know we're in a good jurisdiction and we've got majors around us, so we have options.
So what are the NSRs on both projects?
Well, Shining Tree's quite low. W2, again, it's also fairly low. There's one of the resource areas, there's a 2% NSR in the CA zone, of which we can buy back 1%. And a lot of the W2 property was staked or made on different acquisitions. So they either don't have royalties or quite low royalties. And then, like I said, the royalties that from the vendor that we did buy some parts of the property from has a 2%, so we could buy back 1%. So you could certainly do a transaction where you put a new royalty on, and then concurrently you buy out some of these other royalties for a few $1 million to reduce them.
Right. Yeah. So you got a lot of possibilities. I think the one thing that would probably drive your value is getting a PEA on that W2 project, because I think the NAV is going to be pretty big versus your current market cap.
Sure.
So that'll get a lot of eyeballs on your company if you release a really nice PEA. And I got to imagine that if you do a copper project and you use all those offsets, that it's going to look pretty interesting, right?
Mm-hmm. Yeah,
So
exactly.
so I know PAs is going to cost you some money. PAs aren't uber expensive though. When do you think you could get a PEA out on the W2?
Well, it definitely wouldn't be till next year, because I think we've got to get that next phase of drilling done, just to get a bit more of it into inferred measured categories and as well to expand it. So I'd like to get that work done, but yeah, PEA could be done next year, towards the end of the year.
Right. Have you thrown any ballpark numbers out back a napkin on how many pounds of copper per year you would initially mine?
No, not really. I haven't quite gotten to that. We've really just been doing more of the resource, getting the resource together and drill planning, and we're actually just starting to do some engineering now, so some pit shell work and stripping ratio. So that's something we are starting to look at doing. So once that's done, we'll have a better handle on what some of the costs would be.
That's interesting. If you're being honest with us, that means that you feel like it's a waste of time to even do back a napkin because it's going to get bigger. Is that what I'm hearing?
Yeah, for sure. I mean that Gabbro, because that's the one thing about these copper camps in Ontario. You've got Wyloo, which is Fortescue, and they're looking to build the Eagle's Nest. And then you've also got Juno and Teck, for example, and Eagle. So yeah, I think we are better to be a seller or a joint venture for this project. And what we have done, though, Don, is we believe that the current resource we've done can get 3-4 times larger at surface in that first 200 meters, and that's based on 120 drill holes. The mineralization is identical in that other gabbro area that's undrilled. So I think we're better to sort of keep increasing the size of that. Get the tons up to 1 billion pounds sample, and then you've got something that would really be of interest to a major, and then perhaps a PA.
Right. Yeah. So there's a lot of big players that like big copper mines, right? And none of those guys are interested in you yet. So you think you're going to be able to bring in one of those strategic investors that like these big economic copper projects?
Yeah. I mean, we are now talking to because don't forget we've just been consolidating. We just bought that main deposit last year. We're just getting the metallurgy done. I think that's key for a polymetallic project to have that metallurgy done, and then we'll be able to get in talking to a lot more of these majors. But we have had meetings with all of the BHP, Glencore, you name it. They're at least now are aware of the property and following the region.
Yeah, I wasn't talking about the majors. I was talking about strategic investors.
Okay, sure. Yeah, that's a good idea.
I mean, they can come in and buy 5-10% of your company for peanuts right now.
Yeah. Well, it's interesting. I actually just got a call from like a big institutional investor in Toronto who's like, we've been looking for platinum palladium stories, and little did we know there's one in our own backyard in Ontario. So just because they've seen obviously the gold price move, and like you're saying, they're expecting that platinum palladium should follow. And so I know there's that's the kind of institutional investor we're looking for right now.
I think there could be a big name, very possibly a big name could come in, take a big position in your company, and then really kind of change the whole tone of your company. Yeah, John told me that this was going to be an interesting story, and the valuation is kind of silly cheap. I mean, if you like copper, you gotta, and you like platinum and palladium, you gotta absolutely love this story. The only thing that like I mentioned it earlier, the only weakness right now is your valuation. It's two-edged sword, right? The low valuation makes it really difficult for you to raise money. But once you get over that hurdle, once you get big enough where you can raise money, then everything just starts speeding up, right? So getting from 10 million to 50 million is the hard part. Getting from 50 to 250 is actually easy.
Yeah, no, you're right. Yeah, it's true because the institutions want you at that 20 to 50 million minimum, right? And then breaking out once you get a couple of those guys. So I have been meeting with the institutions, and I think if we cross that 20 million, 25 million, we'd be able to start getting a couple of those guys, which would definitely help. And they're obviously longer term investors than some of the flow through investors.
Right.
Yeah.
This is a really interesting story. There's actually been some guy that's been sending me emails on your company for about a year now. And he loves he actually is a pretty big shareholder. He's in Europe and he absolutely loves the PTX. I mean, he's constantly sending me stuff on PTX. And now I see why.
Yeah.
But I'm not interested in copper, and he's like, yeah, he absolutely, you're his favorite stock.
Okay.
Absolutely favorite stock. He sends me emails all the time for like the last year.
That's funny.
And your company hasn't done anything and he still absolutely loves you. I'm waiting for him to give up. He won't. He's like, I'm not giving up on this company. He's laughing. He's right now. I'm sure he's going to watch this interview. He's just cracking up because I forgot his name.
I won't mention any names.
He goes, I send you emails all the time. You don't even know my name, man. Come on, man.
That's funny. Well, I do have we have quite a few European shareholders, but I have a feeling that I know who you're talking with. So,
yeah, European shareholders have a different profile, I think, than Canadian or American shareholders. They're longer term shareholders. When we interviewed Sonora Gold, they have a lot of their share structure is German owned and Swiss owned, and they're just they're willing to hold on for 3 to 5 years instead of 1 year, right? So like that's always positive that you don't have to keep rechurning the share structure over and over again, because that's really a CEO's, I think, one of their biggest top three problems is if you don't do, if you're not communicative, at least I know you are, Greg, but if you're out there and you're not communicating with shareholders, that gets rough when the stock doesn't move when the rest of the market is moving. We just noted on our last podcast that GDX, which is the big boy ETF in our sector, is up about 70% through yesterday. So year to date, right? So when you see that as a shareholder and you're like, wow, I'm up 70% in this and I'm only up 10% in something like PTX. But that's why these interviews are helpful, to try to show an investor that they may just be missing a couple of different things. So
if I was bullish copper, there's no way I wouldn't buy this stock at this value. But I'm not. I'm very bearish the U.S. economy, and the U.S. economy is 25% of global GDP. So my feeling is that if the U.S. economy basically goes in the dumper, which I think it's going to, it's hard for me to buy copper projects because it's very expensive to build these copper projects, and it's going to be difficult. But at your valuation, I mean, I'm an idiot not to buy it. I mean, this thing could rip to $100 million in a heartbeat. I mean, it's
you're right. Yeah, because don't forget, you said it earlier, Don. You're getting the gold assets free, right? Grade camp, and because we've done the metallurgy now, we've been looking for peers, and it really isn't a copper. It's not a typical copper porphyry, right? It's a mafic project, and a lot of our peers are actually platinum, palladium, gold dominant. In our case, you just happen to get a nice copper nickel grade, so that's why we call it a copper project, but it really is a multi metal.
I mentioned you could look at it both directions. It's either a cheap copper, a low cost copper project, or a low cost PGE project. Take a choice. It can be either one. And especially, like I said, I'm expecting platinum to go to $4,000. So, and palladium is going to follow it. And so if platinum and palladium go nuts, then suddenly, it looks like then the project just becomes more and more valuable, right? Then you start looking at in situ, and in situ goes actually ballistic, right?
True enough.
So nice story. I actually haven't really dug into it, but because I'm not a big fan of copper, but this has been really interesting.
Good. And how do you guys find the U.S. investors? Are they getting back into the resource space? And
the bell rang about 2 weeks ago.
Okay.
And more and more people now are starting to. It's early, but I'm actually feeling the sentiment turn, where people are really recognizing that I better pay attention to this space, or they've been paying attention to it, but they've been on the sidelines, and now they're coming in and they're basically realizing I better buy some of these miners because it's early and gold's going higher and silver's going higher. So it's I think the bell rang about 2 weeks ago, and I don't think it's going to get unrung. Now it's just a matter of silver getting over 40. And I think I've always thought that would be a key level. We get above 40, and I think this whole sector is going to bring in all kinds of money and all kinds of people. That's really the key. And then when it runs from 40 to 50, when silver goes from 40 to 50, that's going to be the beginning of the bull market. That's going to be the first initial surge. And that's when, and that's what we're waiting for, that 40 to 50 move by silver. I mean, it's really going to be a huge game changer. So we're right there. I think a lot of people are recognizing that we're really close to that move, get above 40. Because if you look at the silver chart, there really isn't very much resistance once you get above 40. Because we've only been above 40 very few months historically. So there's not a lot of resistance above 40. And so the momentum is just going to be massive. And the fact that silver has been putting in a base here at 37 is pretty, I think, very significant. So what's going to happen? We've been at 37 for a month now. So what I think is what's going to happen, some people think it's putting in the base and now it's going to break up above 40, but I don't think that's what's going to happen. I think it's putting the base at 37. It's going to go back down and retest 34 and then it'll come back. And the next time it gets above 37, then it'll be gone. So I think we're going to get one more move down, and then we're off to the races. I don't think, and so I think, and I'm expecting that this year. And once that happens, it's here we go. 2 year. I think it's going to be at least a 2 year bull market, and gold's going to head to 5,000. You put a 50 GSR on there, and you get silver to 100. And then copper. I've always thought copper's going to $7. Copper's going to $7 because oil's going to 125. And gold's going to 5,000. So we're going to get this commodity bull market, and that's all going to happen. But even if copper's at $7, nobody's going to be building big copper mines unless there's demand. You can have high copper prices and stagnant demand. And I think that's what's going to happen. Oil, and you can get high oil prices with stagnant demand. It's all about supply. So I think we're going to see high oil, high copper, high nickel, but stagnant demand is my expectation. But not stagnant demand in gold. Uber demand in gold and silver.
Okay, good, interesting. All right, well,
yeah. So we got to do macro, John, simultaneous. We never get an opportunity to do macro with our guests, so this was cool.
Yeah, it was cool. All right, Greg. Okay. Listen, I know you have to head out to a big presentation, so good luck with that tonight. And thanks for joining us today. We really appreciate it.
Are you? Yeah, Greg. Are you going to be at Beaver Creek? Are you going to be at Beaver Creek?
Yeah. I'll definitely be down for a couple of days. So,
are you doing one-on-ones?
I'm just going to be there networking. Yeah, seeing some shareholders and some corporates and that type of thing. So, okay, I'll definitely track you down, Don and John. I'm sure I'll see you as well.
All right.
Definitely we'll be there.
Pleasure, guys. Thanks for your time.
Thanks, Greg.
Thanks, Greg.
Good job. Thank you. Cheers. Bye-bye.
So, Don, we'll summarize here. Why don't you give us your thoughts?
Yeah, I mean, it's pretty unusual that you get a uber valuable copper platinum project is currently valued at $12 million, and they have 2 billion pounds of copper that's economic. I mean, it's pretty. I didn't say 2 million pounds. I said 2 billion. So this is a very big copper project, economic project that's going to become more economic as platinum and palladium go higher. So that's pretty amazing. And then you get the 2 gold discoveries. Those are pretty significant drill holes. I mean, those are both, gold discoveries. But let's put it that way: in Canada, in Ontario, that are getting no value. So you're getting basically 3 projects, right? You get the W2, you get the Shining Tree, you get Hennen. So you're getting 3 significant projects for $12 million. And you're getting platinum palladium there's not too many of those, right? That just comes along for the ride. So yeah, there's a lot about this project. It's exciting. I feel like an idiot for not buying it at this value, $12 million. I mean, the gold projects alone are worth it, and I think those gold projects, looking at those drill holes, I think they're gonna find a lot more. And you're getting this massive copper project for free. It's like it's kind of insane.
Yeah, great analysis. I mean, I've been tracking it and buying it here and there for a couple of years. As my followers know, I never have a perfect crystal ball in terms of an entry point. So, whether you buy it today at 0.074 cents US or it's 8 or 8.5, I mean, Don is implying that this is a multi-bagger, right? Let's say it's a 1-bagger, right? But if it goes from 7.5 to 15 cents US, you still make a ton of money. And then we're talking about a $23 to $24 million market cap. Even then, it's still infinitesimal compared to where this thing could go, because you've got multiple opportunities within the same stock, right? The 2 gold projects themselves should be a company. Then W2 should be its own company. And then they have these other royalties and the uranium piece, which we didn't even get to talk about, but Green Canada is going to get spin off here. So we've been acquiring a little bit more, recently, in the idea that Green Canada is going to get spun off and we're going to get shares there too. And we like uranium longer term. So there's just a lot of good stuff here. I think go ahead.
Yeah. Is their symbol in the U.S. trading QX or QB, or is it trading the pinks?
I believe it is QX or QB. They upgraded this year, and that was a problem for me and my followers because we were getting hit with a fee to buy and sell it, but that's gone now because they're DTC eligible.
All right, excellent. I'm double checking that right now. PANXF is the symbol.
Correct.
Yeah, so this company definitely has my attention at $12 million. Yeah, it's trading QB, so that's good. Yeah, trading
that's good.
7.5 cents right now.
Yep, crazy. It's crazy. I mean, we're going to keep trying to find these opportunities for you to all of our investors, but it's going to be harder next year because some of these things are going to double or triple by accident, and there's just a lot of value that is being overlooked. And that's why we put out a piece this week, Don, on Monday, talking about shedding some of our royalty exposure in favor of things like this, because royalties are doing great, right? Sandstorm's getting taken out by Royal Gold. So we sold all our sand today because I don't want to own Royal Gold. And I sold all my EMX last week because it's moved so much, right? And like, these are royalty companies. They're very safe investments. But right now, you want to be taking risk on, I think. And so something like PANXF, yes, it's riskier. It's a junior, but it's got so much upside potential that, like, you're never going to find that in an average royalty stock, in my opinion.
Yeah. I'm going to put this one down on my crash list because if it gets any cheaper, if it goes sub $10 million, if it drops, 10% from here, I'm like, at a certain point, you just have to buy it, right?
That's right. Yeah. So, well, thanks for your analysis, Don. And it was good to see you today. We'll leave it there. And just a reminder to all our followers and investors, we'll be at Beaver Creek September 9th through the 11th, at least. Don and I are speaking there on the 9th, and that will be at 9:50 a.m., where I think we're the second slot that day. So if you like our format, drive to Colorado and come check us out. And we'd love to meet you in person. So thanks again, and have a great day.